When you're looking for a small business loan, you don't have to go into it alone. In this video, I'll cover the 3 steps that an accountant can help you with in order to secure a small business loan. A lot of small businesses take on loans to purchase a large piece of equipment, obtain another business, and even just to get cash flow money so they can expand. But this can be a daunting process. Even if you're prepared to show forecasts and solid research to support your loan application, that won't always be enough to guarantee success. But what do you do then? Well, first up, we have loan planning. When you're seeking a small business loan, you need to have the full picture of what you want it for, how much money you're seeking, and how you would like to finance it. What do you want the funds for? Failing businesses seeking money to stay afloat probably won't be approved for a loan. But businesses that are seeking money to grow will be approved a majority of the time. Sometimes small business owners may decide to avoid taking a loan altogether after giving it more thought or speaking with a financial partner. An accountant can advise you on whether or not they think you'll qualify for a loan based on your financial statements. They can also provide an estimate on the amount they think you're eligible for, but only your bank can say for sure. If your accountant doesn't think you're eligible for a loan, don't worry. They can work with you to resolve certain issues, such as improving your business's profitability and reflecting that profitability to the bank. As for financing options, you can generally choose between bank loans or SBA loans. There are rare occasions when there are other options, such as financing a business vehicle at a dealership or taking on an accounts receivable loan, which we don't recommend. Next up, an accountant can help you prepare and gather financial data. You need to make sure your books are ready before seeking a loan. The bank wants to see how your business is doing financially. If you're behind on your books or taxes and you need to borrow money, you have to get your books and taxes caught up first. Luckily, firms like CSI can help you with back work and back taxes too. Once you're caught up, it's time to show the banks your financial data. If you run an existing business, the bankers will want to look at the past. You will need to provide the last 3 years' worth of business tax returns, the last 3 years' worth of December business financial statements, an interim financial statement, which refers to the most recent prior month statements. Life hack: when you use monthly accounting, you will always have current monthly statements. And lastly, you'll need to provide personal financial statements for the owner and all partners. This is just a balance sheet to show what kind of financial shape the owners are in. You have to sign a personal guarantee, which says that if the business fails, you will guarantee the loan out of your own pocket. Now, there are a few differences if we're talking about new businesses. Startups are exceptions because they won't have any financials or tax returns yet. If you run a startup, the bankers will want to look at an estimate of the future. There must be logic used, not just random numbers. Often, these numbers will be based on the accountant's knowledge of industry comparisons. You will need pro forma or projections of the following: 2 to 3 projected years of business financial statements. These should show how fast you expect sales to go up, as well as costs and expenses going up. Be sure to include estimated payroll needs and your business building's potential income and debt. And then a personal financial statement for the owner and all partners. This is just a balance sheet to show what kind of financial shape the owners are in. You have to sign a personal guarantee, which says that if the business fails, you will guarantee the loan out of your own pocket. All right, now for the last step. An accountant can help you create an ideal presentation. This is going to help you improve the chances of a bank approving a loan by educating you on how best to present the information they've put together. Don't just walk in with a pile of documents. Explain them and articulate your needs and qualifications. For example, an accountant will help a startup explain how the financial statement projections were arrived at. Your accountant can walk you through the lending process from the bank's perspective. In all loan situations, lenders want to know who's borrowing the money, if they can repay it, and whether the bank is protected. You will then know how to show the bank that you need the loan and are able to pay it back. With background on the loan application process, you will be well prepared for that walk into the bank. The stakes can be high if you don't get the funds you need to grow. If you're thinking of applying for a small business loan, you may want to consider working with an accountant, even if you just have a few questions. An accountant can help you every step of the way. planning for the loan, preparing and gathering your financial data, and even helping you create the loan presentation that'll knock it out of the park. At CSI Accounting and Payroll, we've been helping our clients with small business loan processes for more than 50 years. If you want an accountant with that kind of experience by your side, schedule a free consultation by clicking the link in the description. And don't forget to subscribe to our channel if you want answers to all of your small business related questions on a weekly basis. Thanks for watching. See you next time.